Hello everyone, welcome back to my channel Smart Index Edge. In today's video, I am diving deep into a powerful reversal setup with an example on the Nifty today, not just by looking at price candles, but by understanding the behavior of price around key moving averages. Here, I will break down how a sharp downtrend started showing signs of exhaustion, how buyers slowly began taking control, and how the market structure shifted step by step, leading to a convincing bullish reversal. You should know how to spot a reversal early or how to use the 9 and 20 period moving averages like a professional. This is the video for you. So grab a pen, stay till the end and let us decode this chart together. So this slide represents price approaching the moving averages, often shows strength after the downfall. Let us go there. How to know the strength building. With an example of Nifty 50 reversal, I am breaking down the price action, understanding reversal through moving average interactions with the market structure. Finally, I'll take you to the chart and I'll explain it to you in detail, how you need to decode this. Here in this chart, Nifty 50 index, actually this was the fall on 11th is Friday. You can see over here the downfall. The two moving average, yellow color and blue color. Blue color is the 9 period moving average and this one yellow color is the 20 period moving average. You can see the continuous fall. The market started falling like this and it paused. It went sideways. You can see the interaction of the moving average, but it was not showing any strength. Why? Because I'm telling you, because you can see after the fall, a dozy was formed. Dozy was formed and then market started coming down. You can see the candles over here and a pin bar has formed, making a lower low. And then price started moving higher. So people do confuse and enter into the trade because they will think it is a reversal setup and they will get trapped and they will start losing money. Why you should not enter into this trade? Because even though it is interacting with the moving averages, the price was making a lower high, and the next after making an high, it made an lower low. See the difference. I will explain you everything in detail. It made a lower low and then while retracing back, it did not make a higher high. Still lower high. That indicated weakness. Even though price interacted with the 9 period moving average and 20 period moving average, the price action suggested that there is more to come. So it followed through Monday with a downfall. You can see the moving averages, they were constricted over here, then they started widening there. Here comes the catch. How it started building strength in the market, same interaction with the difference. Here you can see on Monday, price, the first 5-minute candle, 15-minute candle, it made a low and it started pulling back and interacted with the 9 period moving average. After interacting with the 9-period moving average, people do mistake that immediately they will think it as a reversal. No. Why? Because the market has fallen down. It is not a reversal. Even applying the 9-period moving average will also indicate after interacting with the moving average, it did not show strength. It started moving down, made a lower low, and then again, you can see the difference over here. The second time, the market started pulling up. It slightly moved inside the 9-period moving average, still making lower highs. From this high, this is a lower high, lower low. And what happened after interacting with the 9-period moving average? Here it made a low. So 3 lower lows, and here you can see after interaction with the moving average, it made an equal high. Equal high, and you can see if you observe very carefully, it made slight high above this price action. And then it made a higher low. You can see there. And then price made an higher high interacting with the 20-period moving average. See the difference? Here it made a lower high, even though it interacted with the 20-period moving average. Here, after interacting with the 20-period moving average, it made an higher low as well as higher high. That is an indication that there is accumulation has completed and the market is trying to move above this. This crossover will not happen immediately on the live chart, only after price moving above, and then only later the crossover will take place, because the moving averages are derived from the price since they are lagging indicators. When they are lagging, you cannot get the crossover. People do say that there is a crossover of the moving average. It is not so. Then it indicated the reversal, keeping this as the guideline, this set of price action as a guideline. You could have entered into the long position, how the reversal took place. You can see over here, price moved so swiftly to make an high of 25,240 on Monday itself. You can see the alignment of the 9-period moving average above the 20-period moving average. That is very, very important. For this alignment, it went through lot of process. Price got accumulated in this range, and the slight observation in the price behavior could have made you to recognize the early reversal. If you recognize the early reversal, that is a boon for you people. So, overview of the price action is 15-minute chart of Nifty 50 index, sharp downtrend, transitioning into reversal. Tools used are 9-period and 20-period moving average. Method is market structure, and I am seeing the moving average interaction and resistance breakout. So, sharp sharp fall and base formation. How it happens? Strong selling leads to steep fall. Once it falls, steep fall, it has to undergo through all this process. First, short-term low is formed, price remains below 9-period moving average, and then it will start show early signs of consolidation and absorption. Phase 2, in the phase 2, what happens is it starts interacting with the moving averages. First interaction with the 9-period moving average, I had shown in the slide, and then rejection. It shows rejection from the 9-period moving average. And second interaction, shallower rejection. That indicates weakening downtrend. Their structure starts forming an accumulation, wedge or accumulation zone. You can see a price pattern over here. Okay. Then in the phase 3, lower low trap. Price makes a lower low, but selling lacks momentum. Hints at bullish divergence are seller's exhaustion. Support buyers and short covering likely to emerge. This process, you need to have a very hawk eye to observe this. With constant observation, you can make out. And even the moving average will start slightly trending towards the upwards. Even slight observation of the behavior of the moving average will hint you for the accumulation and a reversal process. In the phase 4, what happened is it started testing the 20-period moving average. That means longer period moving average. For the first time, it was the first time I had shown you in the chart. Resistance on the chart, Nifty, it was showing 25,120 and 25,164. That was broken with volume. Structure shifts from downtrend to uptrend. That is reversal confirmed. In the phase 5, retest and continuation, price retest breakout zone and finds support and forms higher low. Moving averages turn upward. Bullish momentum continues. See, again I'm putting the same chart. You can look into that. See the price on Monday. First it fell down and interacted with the 9-period moving average. And then it came down and made a low. And it started, you can see the interaction. It was a steep reaction here. In Wyckoff accumulation, they call it as automatic reaction. And after this, you can see price, it is moving horizontal with the time. Horizontal with the time. How much time it has taken, whereas this is a V-shaped immediate reaction. So it doesn't have strength. Actually, it is an immediate reaction, usually for sell and rise. Here, slowly price started accumulating again. You can see there, it interacted with the 9-period moving average. Where you can see the difference over here. It just touched the moving average. It has popped above the moving average. You can see the candle close above the moving average. You can see that. And then not only close, actually body has to come above the moving average. This candle did not follow through candle, though it showed an higher high. it made a low. Follow through candle made a lower low. And then you can see a candle which is very wide in nature, that is 15-minute time frame, equal amount, pulling back equal to this level, that is indicating some sort of base formation, double top formation. And then it made actually what it was a trap actually. People do enter into the trade instead of seeing the price action. So it was just a process of accumulation. When a process of accumulation starts, there will be liquidity ping pong will be there, alternating with green and red candles you can see in the market. But this candle, wide range of candle indicating something change is coming here. Actually, the market, what did it do? It trapped you can see, it trapped the low of this candle, this seller candle, you can see the red candle, and closing inside. That is an indication. Though it made a low, trapping this is liquidity grab and inducing sellers to sell again. The amateurs will sell, but if you have a price action observation constantly, this is the process always. You have to read Wyckoff accumulation or Wyckoff distribution. This is a process which happens in this type of process. Price undergoes through this process for accumulation. It was an indicating accumulation over here at the low. And then because 25,000 was a very, very, very important flip level on the chart. That's why market started reacting from that level. That's why you can see all this accumulation process. The market started accumulating, and when it made a higher low, you can see the price next time going inside. You see the candle there. The body has come up and closed inside the 9-period moving average and interacting with the 20-period average. This is the candle closing body, almost entire body coming above the 9-period moving average and interacting with the 20-period moving average. In this process, you can see higher low has been formed over here. Higher low has been formed over here. And after interacting with the 20-period moving average, again the market reacted and it made a lower low. It grabbed here and then a big candle coming out of this is a huge candle, huge reaction candle coming out of both the moving averages, above the moving average, indicating strong reversal in the market. So don't do mistake of entering into a big bar, but big bar indicates something. Big bar is indicating reversal, but the entry should not be on the immediate above the big bar. You need to wait patiently, and you can see the price coming down, and it is not interacted with it is trying to interact with the 9-period moving average. You can see over here, after this, second time it made an high, again it interacted with the 9-period moving average. It did not interact with 20-period moving average. That means strength is there. Market is moving higher. After this, you can see after two initial interaction with the 9-period moving average, there was a strong momentum, market took off and made an high, and exactly here there was a flip level. You can see the wick over here, that was a flip level around 25,240. Flip levels are very, very important in the market. You should notice those levels because from this level market has broken down. From this level market got rejected over here, and finally in the Monday session the market came down and closed near the top. Closed near the top and indicated that a buy on dip situation in the market. Even on Tuesday, today, the market came down, interacted with this flip level. This is the flip level, that is 25,120. So interacted exactly over here, and again the same process. See, it came down, automatic reaction, even in the small fractal this thing. Same process you can see what was this process repeated here, not for longer period. The market made an automatic rally. It came down, made a low over here, and it interacted with the 9-period moving average. The price action is slightly different, and then it took the liquidity. You can see grabbing the liquidity below this buyers. So buyers were trapped over here. Once buyers get trapped, you can see the candle. See the candle over there. Closely observe the candle. The body is closing above the 9-period moving average. That is indicating strength. When body moved in, see, this process it took lot of time. This was a short accumulation. And immediately, same price action. The price like this, bar came up, and then again it made a low. And again it interacted with made an higher high, interacted with the 9-period moving average, and it made an high, and it got rejected at the same level, and price started moving inside, and then price has closed interacting with the 20-period moving average. It has come down. This is you can say it is an M type of pattern. M pattern can indicate a bearish reversal. The market tomorrow can continue. If it starts breaking below 25,120, it can start moving down also. And the price average weekly balance line is, I've already made video about the weekly balance line. The weekly balance line is 25,164. So once if it starts moving below this and constantly closing below 25,124, and then the market can move down. So this is the price process. Price does it. You need to understand the price action candle by candle. You must start seeing the price action in this way. So conclusion is gradual weakening of sellers and strength in buyers is you can notice in the market with the moving interaction shows dynamic support and resistances. I have explained you how 9-period moving average acted as support, acted as resistance. Structure change confirms reversal. Classic reversal setup with retest and continuation. So finally, please Subscribe to my channel, Smart Index Edge. Be with me, be with Nalnakshi Swami to get more insights into the price action. Thank you very much. Nalnakshi Swami signing off.